Hello traders, Gary Wagner here. It is Monday, the first day of December 2014, approximately 11:30 in Honolulu, 4:30 in New York, and this is the daily report for gold and silver. And what a day we've seen. During the show, I will absolutely attempt to make some sense of what we have seen today, starting yesterday in our markets overseas. Currently, we have gold trading up approximately $43 on the day, 12.11. That's right around the high, which is about 12.20. Now, the low is about 11.50, and that was, as the market sold off, was off about $35 in the morning sessions overseas. So we have had a range like I have not seen in years, if we've ever seen this at all. I do believe we've seen a range this big, but not this kind of turnaround where you had the market in one day down $35, $40 to up $40. Tremendous range during the day. So trader silver has had the same kind of dramatic day. Now this is on a one-day chart. We were looking at an intraday. It's the only way you can see the decline as well as the rise, but take a look at this. This market traded as low as 1410 and as high as 1679. This is all in one day, folks. So we have had a dramatic, a $2 range in silver. More on silver in a little bit. Wow, what a day we have seen in the market. When we consider that this market opened overseas, began to trade lower, actually traded to a low of about 1142.96. That's according to what I'm looking at in terms of our basic market, a high of 1221, a absolutely tremendous range that really, in terms of making sense of it and looking at the fundamentals, doesn't really pan out. Now, what do I mean by that? Well, first of all, let's take a look at our dollar. Our dollar, which of course is lower, and that would be bullish on gold, but it's not that much lower when we look at it. That's the first thing. Equities markets also trading lower today, 20-50-50. Take a look at it from this high. But again, yes, we have had this market lower, but not a dramatic sell-off in the market. Now, when we take a look at all of these markets and then take a look at our short-term gold chart, we really see that we had this market trading dramatically lower as it opens overseas. It then opens here in the United States, and we get this spike back up. So here's the thing. If you recall, on Wednesday, last report I put out before the long 4-day holiday, I said in proper action that sometimes the best trading decision is not to trade at all, not to have a trade on at all. Now, with this dramatic fall and rise, I am so happy that we have been flat in the market. And why is that? Well, my sense is that if we had been short the market, we would have been stopped out. If we had been long the market, we would have been stopped out during the decline. There are no stops out there when you have a $50, $60 range that are going to protect you. And the key is why did the market move up that much? Now, I do believe we've had some massive short covering, first of all, as this market hit this low. Second reason I believe is that we saw some bargain hunting come in when we hit these bottoms again at 1142. Now, does that completely explain why this market has moved in the way that it has? Well, I have to say the answer is no. So whether we want to say it was very, very thin trading, or whether we want to say that there are some big players taking advantage of the thin trading, others might call it manipulation. I call it really taking advantage of what they can. I don't necessarily think it's a fair scenario, but at the same time, it is what it is. And most importantly, now what are we going to do, and where do we see this market going? Well, first of all, in terms of support levels, 1207 has been critically important. It's been important for quite some time as a resistance area. You can see it here on the short-term chart that throughout the month we've had this as being our real top. There is absolutely no doubt. We have now really traded well above that point. We're off of these highs being at 22, we're trading at 11, but the critical area that we have to see if it wants to hold, of course, I believe, is 1207. So traders, we're looking at a half a day chart, 720 minutes, of course 1440 makes up a whole day. And so what we're doing is breaking that 24-hour period up in 12-hour blocks, we can easily see this. This is the dramatic move all the way down. This is what happened overseas. I believe that that was probably due to the fact that the referendum in Switzerland did not pass, but I am quite surprised by the type of move we saw when I saw it moving down $35, because my sense was that that was factored into the market. Obviously, that was not the case. You can see that it comes in, it makes that low, and then, of course, we've had up, and away throughout the day. As I said, trading well above 1200, above 1207, that being the current point that I am looking at in terms of support. So traders, what does that do for the big picture? Well, in terms of the big picture, I've pulled up a weekly chart here. This is where we had our compression triangle, but I want you to notice this. Our 50% retracement, and this is a very long retracement from the beginning, really the beginning of our major count, major first count, all the way to the top of that major third count. When we look at that, a 50% retracement of that particular point is 1168. Now, what that means is that we can still have models within the criteria that we've seen that would show this as a logical correction for this major move that we had beginning in 2005. It's a stretch, mind you, it's a stretch. However, the fact is it has remained above a 50% retracement of that big move, first of all. So when we look at our major count, which is what we're doing now, our major 1, major 2, our major 3, the assumption is we are now in our major 4th, and we also believe that we shifted to a bear market because we obviously did not get the kinds of corrections that we had prior to this, where we had a typical correction. But as I said, we're still above a 50% of the larger move. 61% of this move is 1113. Of course, we're well below that. But what in essence we can look at is this sell-off. And the sell-off can be looked at in terms of a 1, 2, 3. This, of course, being a compression triangle coming into 4, and then 5. Now, if we look at it in that way, according to almost all the models I look at in Elliott Wave, whether we look at the actual distance of wave 1 and then elongate it to wave 2, when we do this, then we come up with a market that should take us to about, call it 1080. We haven't hit that low yet. Now, there's another technique that's used in which you look at wave 3, which is this length here, and then you times that by 0.61. That takes you to about 1039. So under all of the different models I use to forecast where this fifth wave should go, it shows us it still should go lower. However, if the market would bounce from here, as an Elliott Wave technician, we would say, well, we had a truncated fifth wave because it was shorter than it should have been. So it's not really telling us everything that we need to know, because when we look at this model, it says that we should still go lower. When we look at the most recent activity in the market, it tells us that we could have, in fact, found a bottom. So that really takes me to this particular chart. This is our 3-day chart. And of course, what we're seeing, let me try to get this out of Japanese average format, but what we're seeing on this particular model is the fact, without a question of a doubt, let's thin these up a little bit, is that we are now well above that triple bottom. That's right here. And then, as I said, I believe 1207 to be between 1200 and 1207 to be the area that we look at for this bottom. We're well above that. And so if the market would continue to trade above here, a case could be made for a bottom in gold. What does that mean for us as traders? And as I said just a little while ago, sometimes the best move is not to trade at all. In fact, on Wednesday, my last report, that's when I put in proper action. Sometimes the best trade is not to trade at all. I believe that right now our best opportunity is to let the dust settle, see what is happening in this market, and from there form a strategy. Same goes with silver. It's been a dynamic market, but most importantly, the way we've seen these ranges in the market, realize any futures trader, unless you had gotten in just at the right time, would have probably been stopped out, be it long or be it short. I believe that the best bet was for us to be absent or flat in the market. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.